everyone. Good morning, good afternoon, wherever you are in the world. Thanks for having me so much today. Hope everyone's having a good trading day. Market's down today, which is very interesting. We've had an 8-day rally and now we gapped down this morning. So a lot of volatility in this market. Very exciting time to trade. For those of you that don't know me, my name is Melissa Armo, and I focus on a strategy in the market that's based on stocks gapping. And the market actually gapped today. If we have some time at the end, we can pull up some charts of the market. But I really like to focus on the beginning part of the morning, okay, the first 30 minutes. I find that that period of time in the day has a lot of momentum, a lot of volatility if you find the right pick. And that's really what it's all about. Now, I like to focus on shorts. Again, if you've never heard of me before, I like to focus preferably on shorts. It's not that you can't make money going long. Of course you can. But I find that shorts set up very quickly and go fast. And my personality is I'm an impatient person, and I've also found that the less time that you're in a trade, the less you're at risk, because especially in this kind of market, with all the volatility, if you're holding overnights, some days the market's following through, some days it's not, like today. And so it's a very interesting time to be involved. And I also just specifically trade stocks in the US stock market. So a lot of times people ask about different markets. Because I do gaps, there's only one close and open in the Forex market. So you wouldn't really be able to use my strategy daily if you looked at Forex. And I will also explain what a gap is. Okay, we'll go along. I'll answer any questions as I see them. If you're not interested in trading for a living, you can still do this part-time because it's just in the morning for half an hour. If you want to trade for a living, it still doesn't mean you trade all day till 4, because I find that a lot of traders give money back in the afternoon. So even though you might want to do this, or if you do want to do this for a living as your full-time career, it's not mean it's full-time hours. I usually have about an hour prep time in the morning before we trade, okay? And any questions, like I said, we'll just go along. Or you can call me when we're done. My phone number is 929-3200-GAP. You can also go to my website or email me at melissa@thestockswoosh.com. You can also watch me on Fox News. I talk about stocks in the market on Fox News and Fox Business Network. I'm on Charles Payne's show tomorrow night. If you're around, you can watch at 6 o'clock Eastern time. Okay, so hopefully today you will learn something. Hopefully today you will learn something about yourself, particularly, and your goals as a trader, and whether or not you'd be interested in what I do, which some of you might be, some of you might not be. I think when you decide that you want to become a trader, whatever type of trader you want to become, whatever strategy you decide to focus on kind of has to fit your personality. And I described that a little bit ago. My personality is I like fast, quick things. And now specifically because I'm doing television, it really works out great to be done in the morning because I have the rest of the day to myself. Now, if you have other things to do, like a family or a job or a business, it may work out for you time-wise as well. Some people do like the idea of sitting for, 6.5 hours, the whole time the market's open, and watching charts, but I think your eyes get tired when you do that. And sometimes you kind of make up things that you think you see and they're not really there, like setups or trades. And I learned very early on when I started out, which was 2008, it's 10 years ago now, that really the best time to trade was what I call the open. So the market opens at 9:30 Eastern, and then the open is really between 9:30 and 10. That period, a lot of people don't understand, and yet it's a very valuable time period because there's a lot of information where if you get the correct setup, you can get a nice play in something. And actually the market was a good example of that today. NVIDIA was another good example of that today. I called an option a put in NVIDIA last week. NVIDIA is falling off a planet today. Great stock if you did it as a day trade or as an option trade. And if we have time, we can look at that too. I just put in here, this is through the end of April because we're not through the end of May, just to kind of give you an idea about the money that you could make if you did want to do this for a living. Now, this is an advanced risk. Some of these trades were a little more than $1,500 risk. Some of them were a little less. But from January, February, March, April, these were all the trades and the profits with an advanced risk. And some of the days the room was closed or there weren't any trades that you could have made. Wins and losses are all listed here. So 140 grand in 4 months is really spectacular. Now keep in mind, I've been doing this for 10 years, but that's really what, if your goal is to do this and to make a lot of money, I'm telling you it's possible, okay? It's possible. This is March, into the end of March, took some time off over the Easter holiday, April, and now we're into May. So we'll see what May brings. May has been a little bit Interesting with the market rallying, but we've still found some really good shorts. Today actually was PM as a good one, and like I said, NVIDIA. Okay, so what's the philosophy? What's the thought process? What's the thought process behind the strategy that I decided to focus on, and why? I'm trading with power, okay? I'm not looking to trade pullbacks. Now, I trade focusing on technical analysis, which for those of you that don't know what that is, it's looking and reading price patterns in charts. You can look at day charts, you can look at 1 minute charts. I like to focus on the daily. But I'm not waiting for pullbacks for entries or setups, okay? Many times if you do that, you will miss the move. So what am I looking to do? I'm looking to trade with power, with momentum. I'm going with the momentum. Again, NVIDIA is a great example today. Stock gap down, fell hard into the open, okay? Follow through the earnings, it gapped down on the earnings on Friday last week. For whatever reason, it was an earnings miss, it failed, gap down. And if you had shorted or bought a put in NVIDIA today, you'd be playing the momentum to the downside, okay, as a short, again, which is what I like to focus on. So I think it's really, really important if you decide that you want to trade to have a focus. It's the one way that you can be successful. And I always say to people, if not now, when? Now, many people say, well, it's the summer, it's May. Let me tell you something. Trading in the summer is a great time to trade, just like it is any other time, if you find the right stocks. It has nothing to do with the time of the year. It doesn't have anything to do with cycles. It has to do with finding whatever is gapping, and again, I'm going to go over what a gap is in a minute, that happens to have a lot of momentum into it. And 2018 is set up to be just a really, really big year for the market as far as volatility. And although that can be difficult for some people, it means opportunity for people that know what to trade and what direction to take the trade. Because obviously, for example, if you were long, and I'm going to just use NVIDIA because it's falling right now, if you were long NVIDIA today, you would be losing money, okay? So it's not only is it about the right pick and having a big move, which is the momentum, it's also about getting the direction right, all right? So here's a chart, and this is a chart of the SPY. This was just early this morning here. You can see how all the volatility since the beginning of the year. This is the beginning of 2018. This is the SPY. It's the SPDR, the S&P ETF, which I do look at. And again, we gapped down this morning. This was in the pre-market. It was 9:04 a.m. So this was in the pre-market. Now, I'm going to explain to you, looking at this chart, what a gap is. A stock gaps, or any ETF, or anything that trades in the U.S. market, it's the difference between the close and the open. And I'm going to go all the way back here from the beginning of this drop-off. This was early February. Market made a brand new all-time high. This was end of January. Very quickly after that, we gapped down here, broke, fell, gapped down again. This week, we had just an incredible sell-off. And it happened very quickly. And this is, again, one of the reasons I like to short. So the market gapped down. Now, what's a gap? It's a difference between the close and the open. So we closed here, whatever price this was. I'm just estimating here around 282-ish. Open here in the morning around 281. This was like on February 2nd. Yeah, it was the 2nd. This was the 5th. Then we gapped down the next day. Then we had an even bigger move, followed through, bounced, and we've never really quite been able to recover since then near the highs. All right. But the point is, though, that I want you to see this is all selling. And this is also a gap. So if you don't know what a gap is, that's what I just said, is the difference between the close and the open. The U.S. market has a close at 4 and an open 9:30. So in between, stuff happens. So this was live. And again, I did this in the pre-market. Market wasn't open yet, but you saw the market was down. Down here, we were down in the spiders this morning. Now, I didn't look to see exactly where we opened, but at one point we were hovering here at this is a moving 271.57 this morning when I clipped this, okay? So if you decided to, trade with me or learn my method, do it, you'll be looking every morning for gaps like this guy, like this one here, and even gaps like this morning, which these are all shorts. Here's another one over here. This was the end of March. So these were bearish moves in the market. Actually, here was another good one here. That was in the middle of March. And actually, you can see this really here. This is really obvious to me here today. Now I'm looking at this. Yep. Look at this. We have not this. Look at this here. This is now becoming like a level. This is resistance now in the SPY. Does everyone see that? Well, this is very interesting because a lot of people, we had a big rally here for the last 8 days. Anyways, learning how to read charts, this is a day chart, really helps you see the price to determine where the momentum and volatility is going to come in. So you can play it, whether it's today's play, whether it's these plays over here, because this is all opportunity. All right. And again, you could have gone long the market, different bullish gaps in here, but I prefer to short. Now, what am I looking for? I'm looking for institutional moves, institutional money, the buying and selling of institutions, big money in the market. That's how you get the big moves. And if you want to be successful as a trader, I really think it's so much easier if you trade with that big money. Otherwise, you're scalping and looking, like I said, to buying pullbacks or shorting resistance and taking scalps. If you can become an expert in really seeing and defining where institutions are buying or selling, you will have a higher rate of success. And I do that by reading price action and charts using technical analysis. And I'm using it in gaps, all right? And I'm determining it in the pre-market. I'm reading the footprints of institutional money in the pre-market, and you could do it in the post-market. Sometimes there's gaps at night. Sometimes there's gaps in the morning. And at night, it's called the after hours, after 4. Anytime after 4, if the stock makes a move, it would be considered to have a gap. Now, I don't think there's any earnings out specifically tonight after the close that are big. Macy's is tomorrow morning. So tomorrow morning I'll be watching Macy's. I don't know if it gaps up. I don't know if it gaps down. I don't know if I'm going to short it. It might be a long, but I'm going to be watching it. It's probably going to have a move, all right? And the idea is determining what that move will be, whether to go long or short it, if the gap itself is being moved with institutional money, or if it's just a nothing gap. Because some gaps that happen in the market are completely unplayable, and they're what I call nothing gaps. What does that mean? It means it's not a long, it's not a short, there's really no read on it. Really no read on it or anything that you could do to really get a swift move with the institutional money. And by institutional money, I mean hedge funds. I mean big traders, huge traders, all right? Banks that take positions in stocks, like the trading desk at Goldman, for example, okay? You have big institutions that play the market, all right? And they make decisions to get in and out of stocks, buying and selling, and they can short too. And there's a level of commitment when someone decides to buy 1 million shares or sell 1 million shares of a long position. It's a commitment. It's not like they're getting in and out or doing the opposite thing within an hour or even the same day. Okay, so this is very it's a commitment, and that's the best way I can describe it. When institutions decide to buy or sell, that is something that we don't really know the reasons why, and we never will. They make decisions based on information we don't have access to, like research reports. These research reports, they buy and sell from research companies, and also they create their own, and they cost hundreds of thousands of dollars. But luckily, because there's something called gaps, and that we can see the pre and post market data in charts, we can determine based on that what's going to happen, if the money's going to follow it through or not. And I have developed a rating system to determine that. So it's not just seeing and finding the gap. I use a rating system, and I look at 26 points to rate the gap to determine if it's good or not. Meaning if it's good to short, if it's good to go long, you know, if it's good to play at all, like I said. And that really helps me stay focused so that I can know I'm supposed to be doing this thing today or maybe nothing. Reading the footprints of big position players before momentum comes in really can help you. And then you take the position quickly into the open and you get the move. Now, sometimes these moves can last all day. Sometimes you could be in and out of them in 5 minutes. Those are the best ones. And again, we're talking about this 30-minute period. Most of the trades we focus on are in and out quick. And it's not that you can't hold something longer. You can if you want to. Obviously, if you're up or if you have the market with you, you can hold a trade longer, but I still really prefer to trade in the morning. But this power, once you find it and you can spot it, it really has the ability to pay you big, and that's how you can hit these kind of numbers. You know, most people don't even make over 100 grand a year trading at all, and to be able to make, you know, well over that in 4 months is terrific. But you got to get good at one thing, and then you trade it with size, and then you do it. And really, it's just that simple. I find that a lot of people, however, do not stay focused. They never really get good at one thing. And if I can credit myself for anything since, the last 10 years of trading, was that I stuck on this thing. I stayed focused on it. I don't do anything else. To this day, I don't do anything else. It is the reason for my own personal success and the reason that people are listening to me on national TV. I can predict where something's going to go in a chart based on the gaps, and that is phenomenal. And I'm telling you that buying support and shorting resistance does not always work, and it doesn't always hold, and it's something that most traders do, and it doesn't have a high success rate. It's not to say that support and resistance don't have a purpose or isn't something that you should be watching, but it is not a strategy on its own that has a high win ratio. And the reason is because there's too many support levels and resistance levels. And also sometimes things change trend. And when something changes trend, if you read it incorrectly, you could be buying something at an improper place that looks like support for you, but really the trend has changed and it's going to fail. I don't know if that makes sense. Again, I can try to bring up some charts to show you that. Now I just want to show you another example of institutional money, even though I showed you the SPY, which is a great example of it. This was just last week. This was Hertz, HTZ. Now this was earnings. Stock closed up here the night before around 22.20. Boom. Gapped out in the morning here around 20 bucks. It was a short. Now it rallied first, okay? Came into the prior support, rallied. I'm sure some people bought it, okay? Here was the lift, but it didn't hold. Boom. Came in, sold off huge. Huge in the day, fell to the dream target, okay? Really, this is a great example here of an institutional move of selling. So this is selling action. This was happened last week, okay? It was on the 8th. This was yesterday's. This is a funky looking chart here, and it really closed really weird, but this was XRX. Again, daily chart. Here was institutional selling. Now, it bounced into the close. I don't know where this is at today, but this was a big move down, huge move down in the morning quickly. And I'm going to show you and go over this trade with you in a minute. Closed up here, boom, fell, dropped, broke. So this thing here that's happening in the tail is what you want to be in short, and all this happened really quickly. This was such a fast trade. Actually, okay, so here it is. So this is the 1 minute chart of XRX. So the close of the previous day is behind the clock, all right? Gapped down, tried to fall, boom. Short was in here, dropped. And I didn't even get this whole thing in here because this was a huge trade right in here, but it actually went all the way to 27. Could have held it even longer. But again, this was it. Whether you got it in and out here, whether you got in and out here, do you see down here the time of the day, this is a 1 minute, boom. If you shorted this anywhere in here, you're up. So this is what I'm looking for every single day. But you got to get the right pick. You got to get the direction right. You got to get one that's going to move big because that's how it pays you. And you can see right in here where this area is. This was a huge move. It was almost $2. And it all happened before 10 o'clock. Here's 10. This low in here was around 9:45. Where you get out is really not even that important. I mean, you have the targets, but once your goal is in for the day, you got to watch your trade and get out. Anyways, entry in this one here, 28.73, 4,000 shares, which is an advanced risk. Profit 1,800, boom. Time of the trade was 2 minutes. And this, I mean, this, if I'd known this was going to go to 27, by 10, I would have held it longer. But, goal in for the day, out, boom, boom, take it out. This to me is day trading. A lot of traders want to just wait and hold things and wait for confirmation. The gap rating, the system, everything that I figure out, my 26 points, that's what I do in the morning before the open. The confirmation to me is into the open when it hits. That's all the confirmation I need when this happens here, all right? That's all that I need because I know I like the pick because of the gap rating in the morning. Many day traders wait till after 10 o'clock to do anything, or they're waiting for this thing and this thing and that thing and all these things to line up, which sometimes they do and then fail. And in these choppy times when the market looks like it's along and looks like it's recovering, then falls again and is wishy-washy, it's very challenging for people then to stick on something and really say, I have conviction in this, or I I know I'm going to stick with this trade, and then people tend to have more losses that way. When I'm doing this, I'm calling the stop as well. Stop is in. If the trade stops out, it's a loss, okay? Also use stops, and I think it's very, very important for day traders to use stops. Nobody has unlimited capital, and even funds don't either, okay? You have to have a killjoy point. We're going to kill it. But if you're a day trader specifically, you should use stops because you got to be out of the trade, whether it's with a win or a loss before 4. But again, preferably watch the morning time. Any questions here so far with anybody for anything? I'm just talking here, but let me know if you have any questions. Anyways, it really is about finding momentum. If you can see that and play it and get in early enough to get it, the goal is 50 cents a dollar. So if 1,000 shares of something, it drops $1, you're short it, you make $1,000. If it drops 50 cents, if 1,000 shares, how much you make? $500. I mean, $500 to be able to make that money between 9:30 and 10 every day, 500. I mean, this is possible. This isn't like crazy. And you don't have to take 4,000 shares every day either. Again, I've been doing this for 10 years. It's the point that you're getting something that has a big move, where it's $1, $2. You got to find it, spot it, play it, get in, get out, get in, get out, get in, get out, get in, get out. Things are gonna bounce. So even if you're in a short, you can't stay in something all day. You still have to have a target. But that is why finding that time frame, that stock pick, that's the philosophy behind the whole thing. It's because of the momentum. It's the institutions creating the momentum. They have so much money and they're so powerful, and that's why you got to play with them. As far as the time frames, the daily chart is where I figure everything out, what I'm doing. In the morning in the picks before the pre-market with the rating system, that's where I'm looking at the gap. As far as the trades themselves, once the day opens, I'm looking at the 1-minute chart, which is this here. I clipped this in the XRX. But I'm determining what I'm doing based on the daily, okay? I think I missed a question. Is there a percentage of gap you feel is too small? No, it has nothing to do with percentages. Again, trading would be very easy if I just said short every gap that's down this percent, buy every gap that's up this percent or whatever. It really isn't like that. I mean, I look at 26 things and it sounds like a lot, but you go through a checklist. I might be scanning in the morning, but I'm just making a short list. I'll be like, no. And I'm just quickly scan, and then I might have a little list of like 5 things. In fact, actually today I only rated 2 things. I rated 3 things. No, 2 things today I rated. I rated 2 things today. I looked at a bunch, but I only rated 2. So you think it's a lot, but you're not rating everything that you scan. Okay, and you only need 1. You only need 1. You only have to have one trade a day, 1 stock pick, 1. That's it. That's it. That's all that you need. And you're better off that way. You'll pay less in commissions as well. I wish I could say it's as easy as percentage, but it's not. It's not like that. You're looking at all the information. You're saying, okay, I see that the selling is going to come into this thing today, and we're going to watch it. And if it sets up, we're going to do it. Let me see. How do you scan for these? You can scan anywhere. You don't have to have any special scanning. I don't sell any scanners or anything. I mean, if you come and you want to learn my method, you're going to learn the system. You're going to learn the golden gap system. You're going to learn how to rate gaps yourself. You got to open up your own brokerage account. You wouldn't do any of that with me. And you can get a scanner anywhere. There's free scanners. So that's very easy. Finding gaps is super duper easy. There's no special software that you need for it. Can you do day trade options? Yes. And NVIDIA, I'm saying, was a good one because it's expensive. Okay, I mean, when the stock prices get to be Amazon, Netflix, NVIDIA, even the SPY. Okay, even though we've day traded that before, but some of those things, it just makes more sense as far as the buying power margin to trade them as options, because if you're familiar with that, and we will go over one option trade. I didn't have time to stick NVIDIA in here, but I called the 240 puts in NVIDIA. I don't know where that's at right now, but it got close to that. It was down at 241. But anyways, you just have to have, again, it goes with momentum. You can make money in an option. You don't have to worry about the margin or buying power. It's just the cost of the option. And if you've got it going in the right direction, again, whether you're buying a put or buying a call, if you get it into, like, NVIDIA is a positive trade, even if it doesn't go to 240. You don't have to get something to the strike or through the strike to make money if you get it into the momentum. If you get it within the time frame that you're in the option, obviously, without running out of time, and if the momentum's going into it, and these options trades, particularly the high flyers, Amazon, Google, Apple even, they really start to pick up once the move starts to go. But I saw on Friday the video was going to do it. It could have done it. It could have done it Friday. I called the trade Friday. It took 2 days. So I saw that today was going to happen. It was a great freaking call. And some people killed the trade. I got to be honest with you. Some people didn't hold it. Some people didn't hold. That trade was down before it started to go today. And some people killed it. But, you know, bottom line is you got to rate the gap. You got to have conviction in the chart. And I know what I'm doing. So I do. When you come and you want to do this with me, if you join the live trading room, which you must do my class in order to be a room member. People always ask that. You cannot join the trading room unless you do the class. But I say the best thing is to just take my calls. Take my calls and do it, okay? And you'll learn as you go, not just in the class, but in the room you'll learn as you go. You'll learn how to get conviction. You'll learn how to read price action. The video was a great call. It was a great call, and the people that held that trade through are getting paid today. But some people killed it. So you got to give these options. You got to give these options a chance to work. The day trades, they got to work right away. So we're talking about two different things. I don't want to get too off, but the day trades got to go immediately, boom, but right before 10. The options, sometimes you got to give them a couple days. Usually I'm calling them out 1 to 2 weeks, depending on the cost of it. For example, Amazon's very, very expensive. Every time I call one of that, I try to squeeze it in a week because Amazon costs a lot. Even out for 2 weeks, Amazon sometimes is just completely ridiculously unaffordable. But how do you do the class? If you want to do the class, then you email me at melissa@thestockswoosh.com and I'll send you the papers to sign up for the class. The class is this weekend, May 19th and 20th. You can go to my website and find out more information. Let me just get back in here. I think we're doing okay with time. The number one ingredient, though, for success is focus. Don't let other things get you crazy. You might, like something, do the trade, focus on it, and then decide to do something else. So 1 minute you're doing gaps, then you're doing futures, then you're doing Forex, then you're doing this. I mean, how do you ever get good at anything? Again, stick to one thing. Now, maybe the one thing you're doing isn't good. Maybe it doesn't work for you. Maybe you can't make enough money. A lot of people like futures and Forex because Forex has huge, massive margins they give. I don't even know what it is anymore, but it's ridiculous. You can open up these dinky accounts and get huge margin. That's not a good reason to decide to trade Forex. It's not a good reason to decide to do anything. Don't trade a certain strategy because it's dirt cheap. You can open up a day trading account and trade stocks with margin with $2,500 at a prop firm. You're not going to be able to risk $2,500 every day you trade. You will risk $100 a trade, and you will build the account up. $50, $100. By the end of the week, if you make $500, your $2,500 account will be what? $3 grand. Then another week goes by, and then by a month out, you've got your account up doubled, and then you move forward. You're better off doing that than doing these highly, highly risky, very leveraged things that you only need $500 to do, or something crazy that these people say, and then blowing it all. Okay, so just be normal. I mean, just think. This is common sense. You can't trade without any money. It does cost money to learn my class. It does cost money to open up a trading account. This is normal. If you don't have it, save. But don't just do these pie in the sky things like you're going to make $1 million, like risking, $500. Like, that's just not crazy. These numbers that I showed you back here, let's go back really quickly. These numbers here, the risk is not small. This is, a $1,500 risk per trade. Well, how are you ever going to get to that point? How are you going to get to the point where you're making $2,000, $3,000, $4 grand in a trade? You've got to get to the point where you do it over and over and over and over and over again and learn it and do it. It's not that it has to take you forever. Maybe you can get there in a couple of months. Maybe it takes you a year. So what? If it takes you a year, you can make $200, $300, $400 grand in a year. So what? Okay, so what? I said this to somebody else the other day. Making money, even if it's small, is better than losing, isn't it? If you make $50 a day, that's $50 that you didn't have yesterday. That's better than losing. You know what I mean? Let me see here. I think I missed a question. Judith, email me at melissa@thestockswoosh.com for information to sign up for the class. In day trading, you make money when stock trades up. How can you make money when you short stock or short stock? You make money when you can make money shorting a stock. I think that somebody is asking, maybe you'll understand the concept of shorting. Here, let's go over this. You can short. Shorting is a concept not everybody understands. I'm going to explain it to you right now. And I'm going to say this in a very, very basic way that even the bum on the street here in New York would understand. If the bum on the street, and I said, listen, short this stock, it's dropping. He said, wait a minute. How can I make it? I'm not going to make any money, Melissa, if the stock is dropping. I say, short it. And he says, what do you mean? And I say, bet against it. You're going to bet that it's dropping. You're going to go and you're going to say, listen, I'm going to give you money here because I bet, and I'm just talking very basic, like you're talking to a bum on the street. XRS, you're betting that when this stock opens, it's hovering right around 29 or whatever, open a little bit under it. You're betting that it's going to go under 29. You are saying, I predict, this is what I say in the morning, I have 100% conviction, I'm predicting that XRX is going to drop on the day, and therefore I'm betting against this. I'm betting it's going to drop. I'm betting it's going to fall. Where? Under 29 bucks. Therefore, even if it goes to 28.99, I've made a penny. If it goes to 28, I've made $1. How do you make money trading? $1 times 1,000 shares is what? 1,000 bucks. So you make money of the price of the drop. So for example, if you short a stock, and I'm just doing this to make it easy for people. If you short a stock at 29, it drops to 28.50, and you bet that it was lower, you can make money if you got the direction right. You got the direction right because you bet it was down. Because if you had bought it, you would have lost. You absolutely can make money shorting stocks. A lot of people don't know how to do it right. I would definitely look into it more. Again, I teach it in the class, but I'm telling you, a lot of people don't know how to do it right. And a lot of people don't know how to do it well. A lot of people love to go long, and going long is great, but you're missing huge opportunity to the downside. And I'm telling you that things drop faster than they go higher. Why? Panic. So for example, let's say NVIDIA. Say NVIDIA, say you were long it. Stock is great. Stock is still in an uptrend even after the day, by the way. Stock's falling today, but it was in an uptrend. It's been an uptrend. Stock made brand new all-time highs last week, right before the earnings, actually, okay? So stock was rallying. If you're long NVIDIA, depending on where you got in, you were up. In fact, every day it rallied and every day it moved up, so everybody was up. But then the earnings came out, and for whatever reason, the stock then dropped under only the previous day's bar. But it was enough that I saw that people were going to start to exit it and it was going to take a hit. And I rated the gap. I rated the gap for my system. So today is where all the selling is coming into it. So depending on where you bought the price of NVIDIA, you might still be up. I mean, if you bought NVIDIA a year ago, you're up no matter what, even if it's still falling today. But you might get out today, even though it's falling, because you've been up in it for a year, you're up in it, and it's falling today, and you're giving money back because it's selling off, even though you're up. So you might have been up $5,000. Now the stock's selling off today, and now you're only up $4,000. Now you start to panic. So selling is great. Shorting is great because you're shorting selling action because you're shorting panic, and that's what happens fast. Meanwhile, there was no emergency for you to buy NVIDIA. You could have bought NVIDIA 5 years ago, and you would have been a lot better off, but you didn't do it. In fact, it took you 5 years to decide to buy it. You only bought it last year in 2017 when the market was rallying, everything was making new highs, and everything was great, and Trump got elected, and everybody's jumping up and down. The market's higher every day. It took you years to buy NVIDIA. If you had bought it 5 years ago, you would have been better off. Stock has rallied. It's really made an amazing move. But the point was you thought about it for 5 years to buy it. There was no panic. You weren't in the position long and you weren't in it at all. But do you see why when you are in something and then you are down, or you were losing money because you were up more and now you're down, or you're not up as much as you were, that's panic. It's a real emotion. It's a feeling. And that's what I'm spotting and seeing in a big way. But this is, I'm trying to explain this. I think it really just explained that actually pretty good. Let me look here. The easy money is almost always to the downside. You could say easy, I say fast. I don't even want to say easy because, for example, and I actually talked about this on TV a couple weeks ago, Apple was a great long. If you bought Apple, you could have just bought it. I mean, Apple had earnings and flew up over 190. I mean, you could have easily made money buying Apple. The price you got in would have been, who cares? You could have just bought it, poof, and it went. So you can make money going long easily, and you can make money shorting easily. But I'm telling you, the shorting action happens quickly. That's the benefit. And the reason is because of panic. But conceptually, what I'm saying is that you can short. If you don't know how to short, then you got to learn. You're missing out an opportunity of things that happen quick. And once again, the less amount of time that you're in a trade, the less you're at risk. And I think that's important no matter what you do. Now, if you are in stocks in long and retirement accounts, Apple's good, Nvidia's good, the market's still strong. All of these things, you're in them, you're watching them. But we're not talking about that. We're talking about actively day trading. We're talking about day trading for a career. We're talking about just going in and scooping it out. You're just taking a scoop of it. You're just scooping it out, whatever you can scoop. And that's how you do it. I think there's another question here. Let me look. Fear is way more powerful than greed. Yeah, I mean, you can say fear, all of that stuff, panic, all those words are true. Yes. Anyways, it's really about becoming an expert in something, and it's through skill. So you learn it and then you do it. You're learning it and you're doing it. It's like riding a bike every day, doing a sport, trading over again. You look at charts, you read gaps, you get better at it. Shorting, you're getting better at that. So if you're with me in the trading room, you get better every day. Skill is acquired through learning and doing. You get the education, you learn it, and you do it. And you got to do it, okay? And that's how I created my system initially back in 2008. It took me 3 years to put the whole thing together. It took me 3 years to figure out all the points, the entries, all of it. It took me 3 years to figure it out. It was about learning and doing it, making money and losing, making money and losing. I mean, it was back and forth till I got it all together. And it was live. I was doing it with real money, which was very stressful at the time. But I didn't quit my full-time job till I really had the whole system together and knew that I could do it consistently. So if you come and you want to learn and trade with me, the nice thing about this is you could keep another job until you're making enough money to quit, because this is only a certain time frame in the morning that you have to block out in your schedule to do it. Anyways, the system I said is called Golden Gaps. They spot power money. How do you find them? You find them all over the place, from earnings, news gaps, things got with the market like today. Every day there's gaps, okay? Then I get up in the morning, I rate them with a checklist. They have to be qualified. It's not a good idea to trade stuff that you haven't rated. And they really show the power of money. It's an event. Like I pointed out some of the ones to you in the SPY. Many people don't even look at them. And they're so important. Not every gap, though, that happens is playable. And not every gap is created with institutional money. You got to know that. Someone asked earlier about percentages. I wish I could say this percent or that percent. I wish it was that easy. It'd be a lot easier for me every morning, but it's not that way, okay? There is nuances to it, and that's why you go through the checklist every morning. But this is what moves stocks. This is what moves the market. It's possible for you to make money trading because you have these big moves. If trading was just about, excuse me, grabbing 5 cents, 10 cents, 15 cents here, we don't have to take an absurd amount of size and need an absurd amount of money to trade. And that, luckily we don't, okay? But, people trade penny stocks. I do not trade them. I think they're a waste of time, and institutions don't do anything with them, so I don't trade them. And although they sometimes gap, I think they're crap. And you would have to take, 250,000 shares of a penny stock to get it in order to make any money at all. And it's just too much risk, even though they're penny stocks, because you can take a position and feel like you get filled in and out. Low volume, low volatility when you look at the charts, and they're not traded with institutional money. So it's really companies that you would know. Like I said, Macy's is tomorrow morning. Now, I don't go and short Macy's because I don't know what it does, but I'm going to watch it. There is stuff that we trade that you know. I say the company name, you know it. You've heard of it. You can rely on it. You can feel confident. You can trade this. It's going to move. It's not going to go bankrupt or get shut down. I mean, institutions are trading them. There's a lot of money. They're moving every day, volume, all of these things, okay? Real trading, like where you could have a conversation with someone that you wouldn't even know, that doesn't know anything about the market. You could say, well, I traded Apple today. That person's going to know of Apple if they have an iPhone, okay? It's the real deal. But the nice thing about it is you can do it from home. You don't have to be in New York, even though I am. You don't have to be on Wall Street. I do not live on Wall Street. You don't have to work for a Wall Street firm. You can work for yourself. You can be anywhere in the world and do it, because you're looking for this institutional money, and you're looking for it in gaps. Here was another one last week. I just want to show you, I'm kind of running out of time here, but Walmart last week was another good one. It was a short. I took this again early in the morning, 9 a.m. See, this thing was gapping down. So this is the gap happening live. This is all the thing. So this is in the morning. So this is the 15-minute in the pre-market. So this was earning. No, it wasn't earnings. Earnings is out. No, was this earnings? No, earnings is Thursday morning. Why did this gap? This was news. This was a news gap on Walmart. That's right. They ended up buying part of the flip cart. That's right. Walmart earnings are out, I think, Thursday morning. So this is going to do something Thursday morning, but I don't know what. Anyways, this was last week. It was news. And it moved down. So this was all happening, see here the time. This is the pre-market, 8 a.m., 8:30, 9 o'clock, boom. And then here's the setup, and then here's the live day. It was a short. This rated 23 points. So per my 26-point system, it was a short. Anything that rates 20 points or more, you can do it. You can do it in the direction of the gap. And there was the open, and it worked. So the checklist, this is what you learn in the class from me, how to pick the stock to trade each day, whether it's Walmart, Target, whatever. You're looking for power money. And just think about it, common sense, what I've said about shorting and the specific time of the day and trading with momentum. It really makes a lot of sense. And not only that, the focus. You've got to focus on one thing. For me, I will go long if I don't see any shorts I like. But because I've gotten so good at seeing weakness, I've gotten really good at reading strength. So I had called an option trade in Apple as well. When you get good at one thing, you're going to get good at the opposite. So because I've gotten so good at focusing for 10 years on weakness and shorts, I've also consequently gotten very good at reading strength because it's the opposite. So you will, when you decide to focus, I'm telling you, your whole world will just open up and you'll say, wow, I'm really getting this now. Now I see how people can be successful and do it. Because otherwise your brain can just go spastic if you're all over the place with what you're doing. And many people just have to decide. It's simply making a decision. Do I want to do this or do I want to do this? And then sticking to it. Yeah, it's Thursday morning. Yeah, somebody just wrote Walmart's Thursday morning. That's what I thought. It's before the open, 5:17. And the focus on the time of the day is important. And like I said, I do shorts. Conviction is important because if you don't hold the trades into the move, even if they kind of push back a little bit before you're up, you'll miss a big move in something. That is why you stops. But the longer that you trade, the more that you see how this works, you will be able to risk more money over time and make more money over time the better you get as you're learning and going and you get the conviction. The goal is to make money, but it really also is to enjoy what you do. Excuse me. And I'll tell you, if I had to trade all day, I probably would not enjoy this as much. First of all, I wouldn't be able to do TV. And I do like doing lectures like today, you know, and talking to people and doing videos and stuff on YouTube. So I have other interests. I don't just want to sit at a computer all day. I mean, part of it is enjoying what you do. When I was in banking, you know, for a long, long time, I really just started hating it. I mean, I was working 7 days a week. I felt like I could never escape it. I felt like I never had a break. I felt like I was working 24 hours a day. I just hated it. So when you enjoy what you do and have a better quality of life, it really makes a big difference. And you will find that you will also make more money then. If anyone has any questions, we're getting into the end here. Anyways, don't go with the crowd. You've got to have an edge. And this was HTZ. I'm just going to quick flip through this here. That was a quick one. That was a good one too. That was last week. How much money do you need? I told you $2,500 for prop account, $25,000 for retail account. Here was the Apple put. I called the 180 put, something that flew over that number. I don't think anyone is still in this at all. It flew well over, 10 points through the strike. Everybody's out of that. But here was just an example. And this was just the first target. This wasn't even up to 190, what you could have made in it. Any questions for anyone else? I'm going to just run into here to the class information. Summer's a good time to trade. I said that. And here's the information. It's a 2-day course on how to strategically find, pick, and place stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Deadline is Friday, May 18th. Cost of the class is $5,499. It's Saturday and Sunday, 9 to 5. Class is online. You must email me for the papers to register. You must do the class to join the live trading room. I do call the entries, targets, stops, everything in the room every day. And if you want to do both the trends course and the golden gap, trends is for long-term trading or options. You get a savings of $500, that's $59.99. The options I call are just very, very, very basic. You buy the put or you buy the call. You don't have to know any other. It's basically just taking the rating system, getting it, if it's a good gap, and calling it in the right direction, that it's going to happen close to the strike. There are no fancy options trades that I call. Does anyone have any other questions? I mean, it's so simple, you wouldn't even need an options background necessarily to go into detail to do them. If you want to sign up, email me. If you want to trial to the trading room for the rest of the week, email me. Wednesday, Thursday, Friday. It's been a good week so far. And we'll see where NVIDIA goes today. I don't have time to go over it, but thank you so much for having me, everybody.